Good morning. This is Dylan Jovine from Behind the Markets. Today is Tuesday, August 27th. Last week, here we are of August. So truly remarkable survey. A couple surveys came out from Bank of America, some from their research department that I wanted to share that are interesting. And they tell you a lot about what's going on in the market. One of them is a survey that says U.S. allocation, household allocation of stocks hit 57%, near the highest level total. That means that retail investors, the percentage of U.S. households that are in stocks has hit 57%. That has doubled in the last 15 years. And it really is the highest level since the dot-com bubble. I mean, right there. I mean, we are right there, right there, right there. So we have reached the U.S. household, the average U.S. household is now as invested in the stock market as they were right at the peak of the dot-com bubble. The other thing I wanted to share with you is the flip side of that, the split screen. Bank of America also released research showing that their funds, that hedge funds and funds in general, are sitting on the most amount of cash in the last 4 years. So basically, what you see here are retail investors rushing in, fully invested, while professional investors have used the last 6 months or last quarter at least to sell off their stocks. So, I mean, this is the reason that we've been advising our members to really bring in their sales a lot the last 6 weeks, to really sell off some of their weaker positions, to really not go get aggressive unless something really, really good comes across the plate. Something you can really, really hit, something right in the middle of the strike zone. But unless you see something right in the middle of the strike zone, avoid swinging at things. And I learned that from Ted Williams. Ted Williams was the last 400 hitter in baseball. And they asked him in the science of hitting, we talked about what makes him a 400 hitter. And he said what he does is he takes the strike zone and he breaks it down into little tiny boxes. And then he only swings at pitches inside specific boxes in the strike zone. And I've learned that from him. And right now, and that's really kind of the way that I invest, I try to only swing at pitches that are right inside the strike zone, in the boxes of the strike zone that I really, really like. And right now, if normally I have a couple boxes that I swing at, in a market like this that's really extended, where average investors have plowed into the market while professionals have sold their positions, this is a market that's just cruising for a bruising. And also, I just wanted to touch on one other thing before I go. A lot of folks have written in to ask me what I think about the jobs report. And unlike many of you, I mean, we see these numbers getting revised downward by big amounts really in the past 5 months. So the jobs market has definitely been weaker than most folks understand it to be. And that's proof that they keep revising them downward. But I'm going to talk about that more in the coming days because, again, I don't want to be a conspiracy nut. But, you know, it does seem a little convenient that they're really tweaking these numbers and playing around with reported job numbers most in the year before the election. But that's a topic for another day. Anyway, I hope you have a wonderful Tuesday. Take care.